Hello, everybody. John, welcome back to the show. Jerry, how you
John.
doing?
Hey, good to see you guys.
Awesome.
Good to
We've
see you,
got
John.
we've got a few things to talk about today. Let's get started with what we're seeing in the market itself. We're recording right now on Monday, and let me just get a quick look at what the price of gold is and silver. Gold trading below 1850, 1834, and silver is trading at 2128. Very quickly, guys, love to get your initial reactions when you see the prices come down like we've seen the last couple days. Start with you, John.
It's no surprise. There are some forces that we've discussed on this show, and most people in the community understand that whenever a day or two of annual mining activity can be represented in 1 or 2 days of paper trading, you're going to get a ratio of 240 or 250 paper representations of silver, and in those to 1 ounce. So basically, that's what's great about if I buy from Guildhall Wealth and they ship the silver to me, and when I hold that silver, to think in my hand, it's like, really, 250 other people think they also own this silver. It's like, no, I own this silver. And we all know the cliche: if you don't hold it, you don't own it. So that's really what comes to my mind. Is this is really just an effort, or really a way to see if weaker hands will be flushed out, and then we'll see that it hits support. We're getting dangerously so close to these numbers, but I'm not worried about this at all. I still think silver, I looked at how it's doing over the last 5 years, and it's way up. And I always use 5 year. And if you go back 10 and 20, it's even better. So that's how I feel.
Yeah, that sounded good to me. Jerry?
Yeah, we're touching off a good support level at about 20, 21.20. US dollar, on the other hand, it's just being driven up. The US dollar should not be this strong. The US dollar index hitting like 106. This is about 11-month, almost a year high, all in the back of, let's pivot away from the government shutdown and look back on the narrative of higher rates for longer. This narrative, this push that the US can actually continue to raise interest rates at the worst time. Last week, Moody's came out. They tweeted that the US, if you shut down the government, it'll be very credit negative to the US. So they're already watching the US credit. The interest rates, it's already showing a lot of signs of destruction in the U.S. economy, global economy, and that. But it was an opportune time, I think, for a good smackdown, like John mentioned, with the 248 to 1 paper to silver ratio. We saw how many ounces of silver left the COMEX over the last week and a half, 2 weeks.
Yeah.
Millions of ounces out. Where are the ounces going? People are requesting delivery because it's right on. If you don't hold it, you simply don't own it. And JP Morgan headline news, they just had to settle the US Virgin Islands and Epstein's case. So we know that what JP Morgan does in these markets, take an opportunity on the silver market is what I say, is what they probably did on that one. A good monkey hammer.
Yeah, so I always think that desperate times call for desperate measures. That's often how I view these pullbacks in the market. So, John, I want to throw back to you here on that one, because do you think that potentially JP Morgan is getting desperate? Maybe this is something to do with, we'll look back and we'll say that this does have to do with the shutdown, that this might be a way to get some extra money for JP Morgan. Maybe it shows at the same time some solidarity for the dollar, because if gold and silver are going down, obviously that's going to look good for the dollar. Still, I always think that somehow these type of moves downward are meant to neutralize something that's about to come our way. What do you make of that?
Yeah, that the third thing you said, especially as far as banking risk, I think there is something that there's an eerie silence from many. As we know, all the banks are connected in terms of the way they have to trade with one another, especially overnight. I was doing some deep research into commercial real estate numbers across US, and I think it's as high as 20% average vacancy. And so the banks are on the verge, and most of these office buildings that are getting ready to refinance again are going to have to do at this new rate, which means, especially with people not returning to work, given the fact that this technology that we're on right now works pretty well, the banks are not in a good position should they have to think of all the lending they've done in these major metro areas. And I looked across the top. There's a data source here where you can pretty much look up any zip code and see just how much these vacancies. So this could be a way that, where the bankers are just their last hurrah before this other shoe drops.
Yeah, or they paper over it again, right? And paper, because it seems like, what happened with Silicon Valley Bank, we're not hearing any other things that could possibly be happening. And I don't think that there isn't anything happening. I think they're doing a great job to make sure that it doesn't get to the front of the newspaper. If people are still reading those things, I don't even know. But yeah, I think again, we see the market come down. I think you always also have to think about, this is an actual world we're living in. It's not a digital world. There is a price to pull it out of the ground. There are prices that wholesalers have already purchased tons of product at. Moving forward, they would maybe get to buy it at lower prices, but it would take a long time for lower prices to work its way through the system. So I always see these paper smashes as exactly that. Paper, digital, not real world. It takes very little time before these wholesalers start to raise premiums because they simply didn't buy it at those levels. And then you always run the risk, just from a large fundamental perspective, you always run the risk of, well, did the price just go below the cost to actually mine it? Because those miners can shut down the mines. And so I think that there's always such limited downside and such amazing upside potential in both gold and silver that you can't help but look at any of these things as potential opportunities to continue to build on your positions. And of course, if you're not in a position to continue to build, that's okay. Just turn off the computer screen, come back in a week, a month, and things could be very, very different. In the meantime, how do you guys feel about what we're seeing with the shutdown and where the economy is going? Can the dollar continue to persist like this for, let's say, another year, Jerry?
They averted for another 45 days. So it was kicking the can down the road for the US and Congress. They're going to have to reconvene and hash out some sort of solution. There's so much divisiveness there on the floor. I highly doubt. I think this is going to be ultimately U.S. credit negative, like Moody's said, which is going to have an impact on the stock market. The stock market is bleeding at a pace that is really ramping up. The algorithms just chase yield, so the stock market is just rolling into these short-term bonds, paying 4 or 5%, and this is unsustainable. Having the market, the top 7 stocks, the Magnificent Seven holding things up, this is unsustainable.
Right.
I think it will cause the U.S. Federal Reserve to find justification to finally say, guys, we're gonna throw in the towel. The fight on inflation is no more. We gotta sustain. We gotta keep this market afloat. And that is going to be dollar negative, because when you start slashing rates, and I don't think they're going to slash by a quarter point, 50 pointers, they'll probably go with a few percent in one shot, hugely dollar negative, which only means stagflation. We start seeing that effect happen right away. We are seeing stagflation here already, but it's not at the pace at which we are anticipating here at Guildhall. So another, I think it's ultimately, there are some headwinds for precious metals. The entire space is feeling the headwind right now, but they're temporary. Coupled with a very bright decades long outlook in metals. I mean, you bring JP Morgan back and it was Goldman Sachs in 2020. They were the ones that had hot listed commodities as their preferred asset class for the next decade. And if you look at the rest of the commodity space, oil, diesel's back over 140. Oil is, approaching $100 a barrel. All of the lithium, you name it, all of the from platinum, zinc, uranium, cobalt, nickel, all these metals are up. Precious metals, it's a space that usually gets delayed with all the politics and politics, but it looks very positive for metals despite what we're seeing today.
So you also think that then that the Federal Reserve that a crisis is gonna hit, they're gonna go into crisis mode, and therefore you think the interest rates would be going down from here rather than they just maintain it because they have to maintain the the look that they're maintaining control. They could print all the money and keep rates where they are, but you think it's going to get that desperate that they also are forced to cut. Now, you mentioned the Magnificent Seven, which I know, John, you've been tracking that a little bit. And to Jerry's point, do you think the algorithms could go the other way and push the metals as a result? The machines take over and push the metals to prices that you've never even comprehended before. Is that a possibility, you think?
Yeah, I think I think the algos work on the 200-day moving average, if I'm not mistaken. I'm not quite sure on that. We'll see on that. I think maybe would be beneficial for some of the viewers here, especially those in Canada, is let's give people some advice on buying from Guildhall Wealth, gold and silver. Let's say they want a dollar cost average and take advantage of this dip. And let's say they have $12,000 to spend. I recommend you go in 3 tranches of, let's say, 4,000, 4,000, 4,000, and spend your first 4,000 on this dip, and then your second 4,000 when it dips again, and then the last 4 of 12 when it dips again. And that'd be a good way to dollar cost average with Guildhall. And then I think this ship turns. I don't have the crystal ball, but that's just sort of what I see happening with cracks, the commercial real estate collapse, which is going to really, really sound sort of the next black swan to push metals up higher. Because at that point, the Fed will have to cut. They'll have no choice. They're not going to let the banking system fail, right? And then there's a really pragmatic way to discuss how to invest wisely with little risk at all, right? With these historically low, especially with silver being the most undervalued commodity. What do you think of that?
I think you nailed it there. I think what you're seeing is you're going to be able to look back in a few years and say, wow, they gave you the chance to get it at those prices, which, they're not all-time lows in silver. Silver trading above $20 an ounce is as it's low. And I don't know, maybe it could dip below. I don't think so, but time will tell. But again, to have silver in the low 20s, it's not like it was in March of 2020 when it was trading at a low of $11. Of course, the premiums were sky high. You still couldn't buy it for less than 17. But again, if you're looking at lows that are now in the 20s as opposed to lows in the teens, that's a solid sign moving forward. So something definitely to consider. Now, something else that we were talking about that we have to consider now. I think it's safe to say that you're politically agnostic, and we'll try to stay even on politics. But you were mentioning before about what we're seeing happening in the States, and that there is a seemingly politically charged pursuit to seize assets. Of a former president. And that's at least how it feels when you're taking away their ability to operate a business, number one. And we'll see where that goes. But what were your thoughts when you started to see that?
Well, I can't believe my thoughts were. I can't believe you read the deposition, Jeremy. That's really good though, because many of us speak to these things, especially on social media, without doing the due diligence. My thought is there's many reasons why you can say you're in favor of one regime or another. If you go back as far as Nixon and then Bush and then Obama and then or Clinton before that, Obama and then we've had Trump and now Biden. We can list forever. Like Trump had some issues with whatever as a womanizer or his mean tweets, or maybe he had some issues running casinos and stuff. But you can't watch this happen where one political party is trying to use their sort of political favors and the court system, especially the Southern District in New York, and their DA to seize Donald Trump's assets especially when they're using this property valuation that allegedly he overshot. That's the part I don't get.
They said he undervalued them.
Oh, he undervalued them. Okay. Right. He undervalued them at what was the number, like 18 million or something?
Something like that. And so I think he's being accused of undervaluing, and then somehow that parlays to manipulating his books because he undervalued. You could get into get into the nitty gritty of it. The point is no bankers lost any money. That everyone got their loans paid back. There's no issues there, and the land in that area is going for significantly higher values, and that's before you bring anything else into it. So it's very hard to look at it, even on its face, as anything other than we're going after a political opponent. And we're getting close to that stage that many people in the precious metals sphere worry about, which is confiscation, right, Jerry? That people, this is now, we're now cusping a topic of people's personal property being seized.
Yeah.
Is that too far? Is that too far?
No, that was my concern, the seizure of property. Go ahead, Jerry.
It's a very big concern, Jeremy. I would say about 75% of our clients over the past 3 years, they voiced this very concern regarding confiscation and seizure. One of my largest clients, he's in his 80s. You know him, Jeremy, very well. He believes the number one threat would be seizure, and when you start seeing that dangerous precedent being passed through, beware. Grab your precious metals, bring it home, bring it as close to home as possible. And this is property. Canadians, we live on crown land, so this is a very whose property is it? Is it ours or the Queen's? And this is another question that we have regarding real estate. Some Canadians are moving forward and realizing, the birth certificate issue and social insurance issues, and you're getting into that rabbit hole now. But to scoff at the idea, I think it's no longer. This is happening when you can see a government in Canada signed Bill C-15 into law. That's the bail-in regime, where the last time was 08-09 crisis, where the banks were bailed out with taxpayers' money. This time around, they will be legally permitted to take the deposits. Which deposits, we don't know, but they can redefine the language like they always do. We're in an era right now of constant redefining, and we're seeing new precedent after new precedent. People are just constantly, jabbing and weaving. We don't know what's going to happen, so the guard is definitely up, and we're just here at Guildhall to try to do it honestly and transparently, because confidence or trust rather is down the drain. And when trust is down the drain, we have to work extra hard to earn that trust. And this is what we strive to do every day at Guildhall, is to earn your trust, be as transparent as possible, and understand what you're getting at Guildhall is physical, in your hands, metal. If you own it in the vault, it's outside of the banking system, which is all digital. And that's the way they can grab at money, because the monetary system is sitting on top of a digital SWIFT system. And that's what they did with countries such as Russia when they were not, or for the sanctions. And when they started the operation in Ukraine, the first thing they did was kick them off the SWIFT system. And that's similar in how you seize bank accounts as well. You can freeze bank accounts simply by using the means of the SWIFT. So huge topic. And I think it's going to be a growing one because it's causing a lot of people to shift now out of the old banking system. And they're looking outside of the box, out of digital and into something tangible that, with assets that have stood the test of time. And people could just simply pivot, get out of Dodge if you have to. So these are very times to be very strategic, and then tactical, because metals, we're in a super cycle. The last super cycle from 1999 to 2011, the entire commodity space as a whole went up 4,000%. So this is not just about defending and being on the back foot. No,
Yeah,
we have a solid, a solid hook coming our way, coming their way, I should say.
right. Gold did a 7.5 times move during that bull cycle. I do want to say, as much as we make fun of politicians, as we should, it was interesting that Matt Getz, of a House member here in the United States, said we were debasing the currency to such great extent that members of Congress now want gold as payment in their bribes because it holds value.
Right. This was like with the Menendez case.
Correct. Yeah, no, yeah. I mean, this is, so in a way, you don't pay attention to what they say, but what they do. So
let's talk about that for a second.
Okay.
All right. The Italian Job, right? We've seen the Italian Job, like the new one. Hopefully you've seen the old one with Michael Caine, but in the new one, do you remember the country's gold that they used? It was Ukraine.
Was it the Vatican?
No, it was Ukrainian gold.
Oh, okay.
Right? Because Ukraine is well known for its corruption, which is where we're sending our money, to one of the most actually on lists of corrupt countries. It's one of the top. And that's where we're sending our money. That's where our governments are sending the money. But that stuck with me, this idea that, it was Ukrainian gold, because when I saw the picture that Menendez was getting this Egyptian gold, I thought, man, this guy must not know much about gold. Like, the first thing you want to do, and I'm not saying Egyptian doesn't have LBMA approved product, but the first thing the guy should have demanded is maybe a little more subtle name on that brand, maybe something American or Swiss, because apparently they got into trouble because they were trying to sell that gold, right? That flagged some things, I believe, right? But I didn't see, a big Egyptian bar as something that was quite discreet. Any bullion dealer would have been like,
that's true.
Right.
Right.
Yeah,
like,
exactly.
Come on, guys, you got to do this the right way.
That's a good point. Yeah, it'd be like taking something from some antiquity from something. Yeah, that's a bit bizarre.
Yeah.
It was funny, with this Menendez receiving gold bullion as payment. We know that even Trump received from APMEX, what is it, in Chicago or New York, as payment for one of his leases in his towers. So he kind of normalized that back then, but this was definitely on the normalization tip that we saw over the past week. Is not only Menendez that received gold bullion, but Costco selling gold, selling out, and that's a huge plus in terms of normalizing ownership of precious metals, where it's similar to Korea, places in South Korea. You can walk into a convenience store, you can buy your chocolate bar or a 5-gram gold bar, whatever. Which bar do you want, right? So it's in the mind now. It's in the forefront of people's minds, and this is one great step towards delivery and demand into the market to really put the pressure on that ratio, the paper to physical pressure. Because when these institutions and exchanges cannot deliver on those contracts that they promise to be able to deliver on, we're going to have a good price discovery that will land metals at its true price. So we're anticipating that day quite excitedly.
And there are reports of people buying significant amount of gold in Hong Kong and taking a quick trip over the border and profiting over $100 an ounce. So,
Oh,
The
that's a
arbitrage.
great arbitrage. If you, there's a lot of people in Hong Kong, and I forgot the closest market, but it's a huge gold market in China. I think it's the biggest gold market in the world.
Yeah.
Shenzhen, I think it is. And yeah, so
I mean, that just underscores the fact that the premiums have moved up in China, that it is more dependent on a physical market, so it's pushed the premiums up, and yet we're still playing around with a paper market. As a final topic, I'd love to get your thoughts on this. I was speaking with the client, and I'm sure you've noticed this, John, over the last decade, more so, probably since the advent of the ETFs. But you know, part of keeping the prices of metals down is to create diversions, to create ways to divert the money that would have otherwise gone into actual physical metal, but to divert it to places where it's not going into actual metal. ETFs are great for day traders and people who want to quick trade the market, but there's a whole bunch of other vehicles where people don't own the actual product and they have investments, not ownership.
right.
And I think that's gonna collapse because people are gonna want the real thing. They're either gonna want to move away from it, or those diversions are going to be used to try to keep the market down even further as people are pulling their money out. Do you think we could see something like that happen? Like, for example, people realize JP Morgan didn't have enough gold to cover the market, so they're pulling it out of the ETF, like what we saw with the silver squeeze or silver being pulled out. And people are realizing, well, there's no silver here, so I'm going to sell the ETF. I'm going to go buy the real thing,
Right.
right? And we could see something where they're collapsing themselves because they're going after this market that they need to try to keep the price down, and people are seeing it, and so they're moving out of that market rapidly. Just a thought. What do you think?
Yeah, no, it makes sense. There's been a lot of discussion of if once we see that sort of rotation into physical only, at that point there won't be the physical there. You've seen, I think, the meme where you'll have a line of people wanting to buy $2,050 an ounce gold, but then the line when it's at $1,800 an ounce, nobody's standing in line for the gold. Have you ever seen that meme?
Yeah.
So it's like it's an odd sort of paradox that people think that the fear of missing out emotion only kicks in when gold starts to take off. So that's sort of the inverse of what you're talking about. I would say that's definitely a risk with that, and it's anything's possible. That's for sure.
Yeah.
What do you think, Jerry?
Yeah, anything is possible. I mean, going back to the COMEX, I was just going through the COMEX rule, the CME rule 589 of what happens when the COMEX cannot deliver. They literally auction silver from the market to buy, and where the dollar or the cost of silver can actually double by or go up by $12 per day, to the point where we reopen the following week, it could be $120, $126. It could just keep adding on. It could continue to compound to prevent the default happening in the COMEX. And this was written back in 2014. Just a topic that came up in a conversation this morning. So, this is really happening. Move from west to east is real. This is just the beginning. I mean, the shift has always been on, but now it's being ramped up with the fear of potentially being sanctioned, the weaponization of the US dollar. Countries have to plan accordingly now. And as a result, the de-dollarization trend has led to a huge alliance, larger than expected, of course, but it's ready to, I think, go to the next level with the alliances and the trade away from the US dollar, especially oil. That's the big nail in the coffin for US dollar hegemony and the control So let's see how this plays out in the derivatives market. The gold and silver derivatives market is too massive, unsustainable there. And when we just have 1% of all that money in the world jumping into this finite gold market, even smaller silver market, you start eliminating ounces. And that we'll see the mania that will happen, the panic to the rush. Even at 2050 gold, 3000 gold, the lineup would be longer than ever before. So truly exciting times.
Yeah, it'll be interesting to see how this drop in the market is bought. I think that'll be interesting to watch. And it's Monday, so we've got a whole week to watch what's going to be happening. John, any expectations of what you think we're going to see this week, and tell our audience how they can reach you?
Well, you will put the link in the description field. The Substack link is sufficient. I'll send that to you.
Okay, great. And any expectations for the week?
I'm going to keep an eye
gold and silver
on
rebound, or we'll just wait and see?
No, I think it's going to go. That's why I called this out with your dollar cost averaging. I think there's going to be two little more bumps to the downside, but it won't go lower than 20.
Yeah. Wonderful. Wonderful. Well, thank you so much for joining us. Jerry, thanks for joining us. And
Always a pleasure.
I'll speak to you at the end of the week.
Yep.
Okay.
Take care,
Good
guys.
to see you guys.
Okay. Take care. Bye.